Hi guys, welcome back. Today I'll be talking about a company called Halfords. It's a UK based company and I believe it will go up in value. These are my reasons why I think it will go up in value. Firstly, if we look at the past financial data, it shows us that last year they were very profitable. They made a profit of about £580 million, which gives them a profit margin of around 3.8%. based on last year's data. Secondly, the book value per share is £1.94. Thirdly, they don't have too much debt. Their debt to asset ratio is around the 70% mark. So the assets, the value of everything they own is worth a lot more than any loans or outstanding debt they may have. My main conclusion was during a recession, used cars do very well. People don't tend to go out and buy new cars during a recession. This happened in the last recession. What that means for Halfords is once they're open, they're going to get a lot of customers going in to service the cars. We know a lot of people as well during lockdown, they've gone into cycling a lot, and a lot of cycle shops have done really well. And I think that will continue on. And in terms of the used car market, people need to service used cars or get maintenance done on the cars. So obviously, if the used car market goes up, the servicing of those used cars, that will go up. And Halfords is one of the biggest players in that market. It has a lot of the market share. I bought 250 shares at 1.46, and that is British pounds. Now, I expect the value, looking at prior data, it should get around to the £2 mark. So I'm going to watch the market, and when it gets close to that mark, I'm gonna sell off. What you need to keep in mind when buying shares, especially in companies, there's a lot of noise in the market and a lot of speculation. So something that may happen on the news, it can drop the price down or it can bring it up. To get really good at trading, you need to try and find the true value of a company. And once you found that true value, you can essentially cut out the noise of the market, because the market will always move up and down. Occasionally you'll see things in the negative. I've been in the negative many times, and then the next day or a couple of days after, I'm in the positive. I'm confident within myself. I know what the value of that share or commodity is, and I'm confident that I'll buy at the right time. However, bear in mind, if the market does go the other way, you need to get out very quickly, because no one can say this is guaranteed. I can't say Halfords is gonna go up, it's guaranteed. That's impossible. No app, no mathematical formula can ever say that. So you have to use a variety of indicators, a bit of research, and I think a bit of common sense when trading financial markets. Please like and subscribe, as this helps me and encourages me to make a lot more videos for you guys.